Good morning. So am I audible to you? If I'm audible to you and if my screen is visible to you, just write in the comment box, yes. Okay, so we will wait for 1 minute. We'll wait for 1 minute so that everybody will join, and after that we will start with chapter 1 of EIS. Okay, so this is your institute website and I want to show you that what we'll be covering in today's class. Okay, let it load. Okay, so any questions that you have, you can ask. Okay, any questions you have, you can ask in the comment box and we will take it up at the end. So now we will be discussing with some of the aspects. Okay, so we'll be discussing with some of the aspects of chapter number 1. So this is your chapter 1 in nutshell. So what is that entire chapter comprises of? First one, they talk about different types of business processes. Then we will talk about different types of automation that we can do. Then we'll talk about risk management and controls. Then we can talk about specific business processes, then diagrammatic representations, and last regulatory and compliance requirement. Sir, are we going to cover everything in today's class? I will say no, because 1.5 hours we cannot cover everything. Okay, so I want to give you first one, I want to give you a framework as to what are the things that we are going to cover today. So categories we are going to cover, automation we are going to cover, risk management and controls we are going to cover, specific business processes. I'll give you some introduction about it, very general. I'm very sure that even if you're reading on your own, you can understand it. Diagrammatic representation, flowchart and data flow diagram, I'm not going to cover in this class. Most of the times I receive requests from the students saying that's a cover flowchart, but in today's class I won't be covering flowchart because 1.5 hours is not enough to cover the entire chapter along with flowchart. There are some YouTube videos in IndigoLearn itself, IndigoLearn channel itself, where you can find flowchart videos. Okay. Last one is regulatory and compliance requirements. Again, very general. You can read it and understand it. Okay. Now, let's go back to our notes. So that was just study material which I wanted to show you. Now, I want to take you back to the notes that you can find it in OneFin application. Okay, I hope that everybody has it. If not, go and download it from OneFin application. All right. Okay. So you can keep asking your questions and I will answer those. Okay. Now let us talk about. Now, one thing before I start, I will not be taking questions in a chronological order. That is, it won't be question number 1, question number 2, question number 3. It will be question number 1, then suddenly some other question number, then again some other question number, so that the flow is maintained. Now, first question. Now, what is the name of the chapter? The name of the chapter is automated business process. These are 3 words. There is automated is a word, business is one word, process is one word. First, let us talk about what do you mean by process. And it is a very general question. It is not a technical question, very general question. So if I say accounting is a process, if I say manufacturing is a process, what do you mean by process? Simply put, it says process is coordinated. It is coordinated and standardized flow of activities. That is to say, accounting is not just done by one person. There are multiple people who are involved in accounting. So they have to be coordinated. They need to coordinate with each other and they need to follow standardized way of doing it. Then we call it as a process. Same way, when we talk about manufacturing, what are we talking about? That is the second portion. They are talking about you take an input, that is a raw material, to give an output, you are going to process it. Okay, so what is a process? In process, you take an input to give a output. It has to be coordinated and there has to be a standardized flow of activities. Then we call it as a process. Very general question. I'm not going to explain in detail. Now, what I'm going to explain in detail is what do you mean by business process? What do you mean by business process? See, whether cooking is a process, yes, it is a process. So first you buy the vegetables, then clean those, then chop it. Then I'm not an expert cook, so I don't know what you do next. But simply put, cooking is a process. But are we going to discuss those things? Answer is absolutely not. We are only going to talk about business processes. So in business processes, what could be the different types of business process? Manufacturing is a business process. Accounting is a business process. Sale is a business process. Purchases is a business process. Now, business process is not a new concept. People are doing it from centuries together. So even in 1700, 1800, people were doing this business process. But all these processes were done manually. Okay, so sale was done manually. Not only that, even accounting was done manually. Entire purchase process was done manually. Entire payroll, that is payment of salaries, were done manually. So even back then, there were business processes, but it was done manually. But now, almost all of these business processes are automated. Maybe if you have a relative, who is working in corporate, month end or every month end at 9 o'clock in the morning, they will get a message saying that your salary is credited. Okay, so now, do you think that there is an HR who is sitting in the company who is getting up at 8 o'clock in the morning and sending salaries to thousands of employees? No, the entire process is automated. Okay, so that is what we are going to study in this chapter. Okay, now they are talking about what do you mean by business process? Answer goes this way. A business process is a prescribed sequence of work steps performed in order to produce a desired result for the entity. Now, what is the desired result? For example, entity wants to be very prompt when it comes to payment of salary. Okay, so that is the desired output or desired result. Now, for you to do this, there has to be sequence of activities. For example, you need to see who are your employees in a month, how many days they will present, what is the salary that has to be paid to them, and the amount has to be sent from your bank account to their account. So this is a series of activities which are performed together, and in total it is called as business process. A business process need to have, okay, this is very important, there has to be a beginning and then there has to be ending. A proper beginning, proper ending, then we call it as a business process. Let us take an example called as purchase. Okay, if I'm going to say purchase is a business function, purchasing is a business function. Now how does it happen? First, people who are working in the sales department will say there is high demand for this one article, there is high demand for one article, but that we don't have stock of that item. So sales department guy, okay, let us say there is one person working in sales department, he will tell person working in purchase department saying that we want that commodity. Now, person who is working in the purchase department will prepare a purchase order and he will sell it to the vendor. Okay, so there are suppliers. So purchase department employee will say we want all these items. Let us say the supplier sends this item. Now, where it is going to go? It is going to go to one more department called as inventory department. So the person who is working in inventory department, the person who is working in warehouse is going to receive these goods. So there is one more person who is receiving these goods. Okay, now you place the purchase order, you receive the goods. Whether your duty ends there? No, you need to pay money to your supplier. Now, who is going to pay? Whether sales department person is going to pay, whether purchase department person is going to pay, whether inventory department person is going to pay. The amount will be paid by a person from accounting department, finance department. Okay, so now what we understand is the people from 4 different departments come together to perform one business process of purchase. Okay, so it has to have a defined beginning, defined ending. What is the beginning? The sale guy talking to purchase person, that is the beginning. What is the ending? The accounting guy making the payment. Okay, so I'm sure that by now you would have understood at least basic of what is a process, what is a business process, and business process has to have a beginning and a ending. Okay, and each and every time this has to happen the same way. Then we call it as managing the business process. Okay, so everybody should be defined, everybody should know what are they supposed to do, and when we do that, we call it as we are managing the business process. We will discuss in detail. Let's look at question number 5. Before I take question number 5, let me see if you have any questions. Okay, there is no question, so let me take you to question number 5. Okay. Now, when we talk about business process, we can classify it into 3 categories: operational process, supporting process, management process. We'll take one super simple example to understand this. Say, one second. Yep. Okay. Say a group of people, let's say one person, another person, another person. Okay, these 3, let's say these are friends who come together and they decide saying that we want to start a food delivery app. Okay, so 3 people came together and they say we want to start a which app? Food delivery app. Now what does this food delivery app do? You must be knowing that they use it at home and you order the food and they will go to hotel, collect that and give it to you. So these 3 people decided, let us name our company called as Zomato. Okay, so these 3 people are starting company called as Zomato. Now you know that who is going to deliver this item? These bike riders are going to deliver the items to you. So first thing what they decide is they will say, okay, so we cannot do it all in we cannot start our company throughout India at once. First we will start in some metropolitan cities. So they will choose, okay, we will start in Delhi, we will start in, let's say, Chennai, let's say we are going to start it in let's say Bangalore. So these are the metropolitan cities that they select. Now in these cities, they want to hire the bike riders who are going to deliver the food. So what are they going to do? They are going to hire the drivers, sorry, not drivers, riders. They are going to hire the riders. Then afterwards, once they hire the riders and other employees, next step is, what is the next step? Next step is you get into the business. So you have tie-ups with the hotels. So every time a customer orders, you go to the hotel, you collect the food and you deliver it to the customer. So this is what we call it as delivery. Okay. So here there are 3 activities. One activity is to decide in which place we are going to function. That is one activity. We call this as management activity. That is, a senior level of management will sit and they will decide where are we going to operate, how are we going to operate. All these things, the senior level decisions are called as management activities. Okay, and this decision making process is called as management process. The way they decide is called as management process. One thing. Next, they decided, okay, we will function in Delhi, Chennai, Bangalore, but you want bike riders. Now, who are going to hire these bike riders? You are going to hire a HR, and that HR officer, the human resource officer, is going to conduct interviews and he's going to select the best candidates. He's going to do advertisements and take interviews, select employees. So this is called as supporting service. This is called as what? This is called as supporting service. This is a supporting activity. Now, last one is after employees are hired, the actual money making begins. So how does Zomato make money? Zomato makes money by actually delivering the food to the customers. So an activity which will result in revenue flow to the organization is nothing but the operational activities. So basically there are 3 processes. There is management process, there is support process, and then there is operational process. Now let me ask you a question and you are supposed to tell me. So if I say accounting, what type of function it is? Is it a management function, or is it a support function, or is it management function? Is it support function, or is it operational function? What is it? Answer. I'm waiting for your answer. Okay, good. I got a answer. I got an answer from Arun, and Arun says it is a support function, and then there is common man. Okay, then there is TP Ravi Kumar. Everybody is saying it is a support function. Correct. Accounting is a support function. Now, sometimes we get confused. What is the difference between support function and operational function? Simple thing you remember, whether this function will generate money for the organization. If the answer is yes, then it is operational function. If it does not generate money for the organization, then it is a support function. As simple as that. So HR and your accounting, all these are support functions. What are the operational functions? Actual sale, what you do, actual delivery, what you do. Okay, these all things are operational functions. Now let's go to next question. So we are done with which question? We are done with question number 5. That is different types of processes. There is operational process. You read it what it is. Now it is very simple for you to understand. Then there is support function, and then there is management function. Okay. Next, we'll go to question number 7. We'll go to question number 7. Now I'm taking very important questions which normally repeat in your examination. Okay, what do you mean by business process automation? Simple question. What do you mean by business process automation? Now I'm going to repeat my sentence again. I've told you that business process is not a new concept. People from centuries are doing the business. But what are we doing in these days? We are trying to automate these business processes. Okay. Now, let us talk about theater example. Okay, movie theaters. Earlier days, how people would book movie tickets. Now, let us say you are some South Indian Rajnikant fan, or you are some Salman Khan fan. Then, as a fan, how are you going to buy a movie ticket? So early morning, you get up at 4 o'clock, 5 o'clock, you wait outside theater. You want to buy tickets of first show, first ticket, all those things. So you're going to stand in a queue, and then you would purchase the ticket. So the business process was there. For the theater guy, he would still sell the tickets, but it was manually. But now it is not done manually anymore. It is automated. So when I say automated, what am I referring to? There are applications. There are applications like Book My Show. There are applications like Paytm. So you can use this application to book the movie ticket. So entire business process has been automated. Same example could be your railway ticket booking, or your bus ticket booking, your flight ticket booking, your accounting, everything is automated. That is where the institute, that it is important that students need to learn how these processes are automated. Okay, now answer. Let's go and read the answer. Answer says business process automation refers to removing the human element from the existing business process. So going back to the theater example. So earlier there was a person who was sitting and would ask that which movie you want to watch, at what time you want to watch. Now they're removing that human and they're replacing it with application. So business process automation refers to removing the human element from the existing business process by automating the repetitive or standardized process components. So what is repetitive? Repetitive is all customers are going to do the same thing, going to stand in the queue and ask for a movie ticket. Okay, so and standardized process components. For example, withdrawing money from the bank. Earlier days, like 30-40 years back, we would go, I was also not there, don't worry. But our parents, grandparents would go to banks, stand in the queue, fill up that the slips, give it to the cashier, then wait for his mercy, then draw the cash. But now, not there. Now you just go to ATM, you just put your card, put your PIN, you draw the money. So now it is a standardized process. It is a standardized process. What? Entering your card, entering your PIN, drawing the money. So you don't want a human here. It can be done by a machine. It can be done by a software. Okay. So this is a brief about what is BPA. Now, next question in examination, they ask this very, very important question. That is, what are the objectives? Okay. What are the objectives? So this is the question. No? What are its objectives and benefits? First, let us talk about what are its objectives. Now, if I'm going to talk about what are the objectives of business process automation, there are four objectives that I can talk about. There are four objectives. First one is confidentiality. Second one is integrity. Third one is availability. Fourth one is timeliness. Okay, what it is? Let's take one simple example to understand this. Now, let us talk about results. Let us talk about results. Earlier days, did you know how ICI was giving you results? Like I'm talking about 6 years back or 7 years back. Okay, so this was very funny thing. So what they would do is they would send your results to the branch. They would send your results to the branch, and your branch would put all student results in their notice board. Okay, so your results were not just limited to you; it was limited to your whole city. So anybody would come and just look at how much they scored. Let us say they did not pass. So they will just say another person's result. Did he pass? Oh, if he is also failed, the guy is happy. So that was the scenario back then. Then they changed it. Then they said no more sending results to the branch. Instead, they automated how they show the results. So on the day of results, there is a website. You go to that website. Now, can you enter random SRO number or CRO number or random registration number and see the result? No, you cannot see it. You cannot see it. You are supposed to put your number along with your admit card number or some PIN number. Only then you can see the result. So automating business process does not mean that you need to compromise on your security. So it has to give you confidentiality. That is your results, only you can see it. That is the first objective. So even if you automate the business process, only you can see the data. Okay, so same way, let us go back to Book My Show example. So let us say you booked the movie ticket. Let us say you booked balcony, last seat, like you booked 3 tickets. So now when somebody else is going to order, he can see that these 3 tickets are booked, the 3 seats are booked, but he cannot see who are these people who booked the tickets. Okay, so business process automation should offer confidentiality. That is the first thing. Next one is integrity. Now, what is integrity? Now, again, let's come back to the institute result example. So they publish the results in their website. Okay, now can you change that result? Can you change that result? Earlier days in primary, we would do that. We would get, let's say, some 35 marks and we will simply change it and making 85 and take it home. Now, the integrity of the data is compromised. Integrity of the data is compromised. What they have given is different. They have given 35. What I'm showing to my home is 85. Okay. So business process automation should not permit tampering of data. Tampering means changing of data. It should maintain, or it should ensure the integrity of the data. That is one more objective. Next one is availability. Now, availability means the data should be there whenever you want to see. For example, results. Okay, so result is announced. But let us say you want to check your results. But this is one sad thing. Okay, on your result day, you will never be able to see the results for the first 1 hour. The website will be, server down. This is exactly opposite to what availability is. Okay, so if you had put your results outside the notice board, yes, maybe everybody would be able to see your result, but at the same time, at least you also were in a position to check your results. But after you automated the process of showing the results through website, availability is the biggest challenge what institute faces. So that is where this point is very important. Even if you automate your business process, the data should be available when called for. Okay. Next one is timeliness. Timeliness means to ensure that data is made available at the right time. Now, to give you a simple example, if institute says result is available at 6 o'clock, at sharp 6 the result should be available. Okay, what is the difference between timeliness and availability? Now let's say institute says your result will come at 6 o'clock, and when you check at 6 o'clock, if the result is there, then you say timeliness is there. But let us say that you want to check result at 10 o'clock, not at 6 o'clock, but at 10 o'clock. But if 10 o'clock, if the website is open, then you say, oh, availability is also there. Okay. So these 4 are the objectives of business process automation. That is, even after you automate the business process, these 4 things has to be there. Next, what are the major benefits of automating business process? What are the benefits? Now let us talk about the same. Let's talk about What are the benefits of automating the business processes? If there is any question, keep asking. Now, we are going to talk about 4 benefits. Let's take ATM example. Let's take ATM example. Now, I said earlier days, you would go to branch and stand in queue for days together, morning like 1 hour, 2 hour and all. But now in ATM, it is just 5 minutes, you will come out. Okay, not even 5 minutes. If you're good with the technology, not even technology, if you know what to enter where, then you can come out within 2 minutes. So that is what time saving. Compared to earlier days, it saves your time having ATM. Next one is quality and consistency. Now, if you were to go to bank each time, then your cash withdrawal process is purely dependent on the staff services there. If cashier is good, he will give you immediately. But if cashier is cranky, he is not going to give you immediately. He is going to say, oh, this slip is not proper, that is not proper, this is not proper, all those things. But once you automate the business process, there is consistency. You go to this ATM, that ATM, another ATM, does not matter where you go. You go it in your state, next state, any state also you go, the experience is going to be same. So that ensures quality and consistency. Next one is visibility. Now, visibility simply means automated processes are controlled and consistently operate accurately within the defined timeline. It gives visibility of the process status to the organization. Now, for this, let us again take ATM example only. So you put your card, you put amount, you're trying to draw the money. If money is not coming, the slip will come and it will tell why the money is not coming. Maybe one reason is the machine is not proper. Second reason is you don't have money in your bank account, whatever the outcome is. But as a customer, you will get to know why you are not getting money. So there is a visibility. Next one is improved operational efficiency. This is very interesting. Earlier days, if I'm talking about bank, okay, in a day, let's say there are 100 customers who walk into the bank. Out of these 100 customers, let us say 80 people would simply go to draw the money or deposit the money. As simple as that. So a repetitive task. So bank employees had to attend to all these 100 customers. Now, 80 would come only to either deposit money or withdraw the cash. And 20 people would come for some other purposes. For example, maybe making a DD or taking a loan. So these are the specialized functions they would come. But because earlier days 100 people would walk into the bank at a time, even these 20 people would not get better service. Even they had to wait. But now bank said, if you want to deposit cash or withdraw cash, you go to these ATMs. You go to these ATMs, you can do it there. So only these now 20 people go to the bank. So now the bank staffs can entertain all these, taking loan functions. So it will increase the efficiency of the bank employee. So these are the advantages of automating your business processes. Clear with this? Okay, so there is one. Sir, sorry for interrupting. These questions are enough for exam November 2020. I will say I am covering important question. So when I say I'm covering important question, I'm saying I'm not covering all the question. I'm covering important question. But if you go through all the questions in this study material or in this book, I would say it is more than enough. It is more than enough. Okay, but again, you should not come back to me and say, sir, you said it is more than enough, but there came one question for 5 marks which is not there in this material. So this is the risk return trade of what you are supposed to do. So you're always welcome to go and read that 500 pages material if you have time. But if you don't have time, then I highly recommend you go through this material. Okay, it covers more than 95% of the questions. So we are done with question number 7. Now, let us go to one more question. Any questions that you have? Okay. Let us talk about question number 8. Explain the steps in business process automation. Okay. Let's take one simple example to do this. Sorry, let's take one simple example first. Then I'll explain these steps so that you can remember it properly. I'm going to give the same example which I give in the normal class so that it will act as a revision to you. Okay. So let us say that there is one school. There is one school and it has lot of students. It has lot of students. And in 1 year, suddenly the results came down. So many students flunked in the examination. They did not clear. So in the parents teacher meeting, the parents questioned the school management saying that we send our kids to your school thinking that your school is a good school, but look at the quality of your education. Our kids did not pass examination. So the college said, or the school said, look, our teachers are best in the industry. They're really good at teaching, but the problem is not with the teachers, but with the kids. The parents are like, what is the problem with the kid? Teachers would say, your kid is not regular to college. Your kid is not regular to school. He's not coming to school at all. He's bunking. Now parents are still more angry. They're like, it was your duty to tell us. It was your duty to tell us that our kid is not coming to school daily. So the school will say, see, our duty is to teach. Our duty is to teach and not to, on a daily basis call you and say your son has not come to school or your daughter has not come to school. So now the parents will decide, all right, if you are saying that, then let me put my kid to some different school. Now the school has to sit and think. Okay, if they say that we are not going to inform the parents on a daily basis, they will put their kids to some other school. So now the school has to decide what are they supposed to do. Okay, so somebody said, why don't you automate your attendance system? Why don't you automate your attendance system? Now, how can you automate the attendance system? So somebody said, look, all that you have to do is instead of manual attendance, some teacher coming and calling the name of the student, you automate it. That is, let your teachers go with the one iPad or computer or whatever it is, then let them mark the attendance in the computer. So if a student is absent, then automatically a message should be sent to the parents. So this will solve all the problems. Okay, so what are the steps? So explain the steps in business process automation. Now let us say, what is a business process? Here the business process is attendance. You want to automate attendance. How are you going to do that? So it is a 8-step process. There are 8 steps to this. First step is why we plan to implement BPA. So the school has to answer why they want automation, why they can't simply do the manual process. So first thing is the kids are failing. Okay, the kids are failing because of which parents are not happy. Parents wants to take their kids to different schools. So first thing is you need to define why you want automation. Step number 1. What is the step number 2? You need to understand the rules and regulations under which enterprise needs to comply with. So you need to see whether there are some laws and regulations. As when it comes to student attendance, there is no such rules and regulations. There are some university rules, but forget about it. There are no rules and regulations which is implemented by the government. Okay, so let's go to step number 3. Document the process we wish to automate. So you need to tell, you need to write down. Document is you need to write down at present, as of now, how is this business process carried out? So you will say, every teacher is given with their attendance register. In that attendance register, there will be names of the students on a daily basis. They call the names of the students and all those things. So you need to write what are the business process that we do as of now. Next step is define the objectives, goals to be achieved by implementing BPA. So what is the goal that you are supposed to, what is that you want to achieve after automating this entire business process? Let us say after automation, the parents will be well informed about the kids, next because of which kids will come regularly to the college, because of which their marks will be good, the entire school result will be good. So you need to write down the objectives, what we are going to achieve. Next one is you hire a business process consultant. Now, who is this consultant? The consultant is a person who has high knowledge about how the automation happens. So college should sit, or the school should sit with this consultant, and the consultant will give the inputs saying, what software should be used and how, at what regular intervals parents should be communicated with, what is going to be the cost of this project. Okay, so because every automation has some cost. Okay, so he will say this will cost you, let us say 10 lakh rupees. Now school has to sit back and think whether it is worth spending 10 lakh rupees. That is the next step. That is calculate the ROI for the project, return on investment. Okay, so if they feel okay, even if I spend 10 lakh rupees, the students are going to come regularly, it is a matter of their career, their matter of their future, then school will be like, okay, 10 lakh, no, take it, but give us the software which would help us automate our attendance system. Then, so that is the seventh step where the software will be developed by the software engineers or software developers. Now, before you directly implement it, you need to test the BPA. Okay, for example, for 1 week, you need to run the test check. You need to put some dummy entries and you need to see whether actual messages goes. Okay, so sometimes instead of messages going to the parents, if the message directly go to kids only, there is no point of implementing this BPA. So all these steps should be taken care of. So how many steps are there? There are 8 steps. There are 8 steps. Okay, so quickly revise these 8 steps. Then we are done with this question. Now, 8. Let us look at question number 18. As I said, I'm not going to touch flow chart. I'm skipping that part. Okay. Now, let's touch question number 18 now. Okay. So till then, any question you can ask. Okay, I'll wait for 10 seconds so that you can ask questions. Then we will go to this question number 18. Okay. So there is, after completing the session, let the class be on YouTube, sir. Do not delete the, it won't be deleted. Don't worry. Please take revision for full chapter of corporate and other law. I wish, Abhijit, I could teach all the subjects, but no, I don't teach corporate and allied laws. But I believe that other faculties of IndigoLearn would be taking this session up. Okay. All right. So let us go to the 18th question. Sir, why are we jumping from one question to another question? Because I told you we are not going to follow chronological order. What are the various types of risk management strategies that may be adopted by an entity? We need to understand the answer. Once you understand the answer, it is simple. Now my question is, what is risk? They can ask, the institute may ask a separate question saying that define risk. So what is risk? First, let us understand what is risk. Okay, so let us say you have 1 lakh rupees. You have 1 lakh rupees with you and you want to invest it. You want to invest it and you want let us say 10% return. So in a year, how much return you want? That is 10,000 rupees. Okay, but you go to one bank. The bank says, we will give you 6% interest on fixed deposits. So how much you are going to get? You're only going to get 6,000 rupees, but there is no risk. Bank will give you. But you say, no, I don't want 6,000 rupees. I want 10,000 rupees only. I want 10,000 rupees only. So somebody says, put money in stock market. Put money in the stock market. You will get more returns. Now let us say that I put money in stock market. So there are two possibilities. Possibility number 1 is I make profit of 50,000 rupees. I make profit of 50,000 rupees. Possibility number 2 is I may make the loss of 50,000 rupees. Okay. So possibility number 1 is 50,000 profit. Another possibility is 50,000 loss. Now you tell me which is risk here? Which is risk? Whether possibility 1 is risky for me or the possibility 2 is risky for me. See, I have to, before you answer, let me tell that there is deviation. So what you wanted is 10,000 rupees. What are you getting is here 50,000 rupees. So you wanted 10,000, you are getting 50,000, correct? So what you're getting is more than what you want. So there is a deviation, but this is not an undesired deviation. This is a desired deviation. You'll be happy about it. But look at possibility number 2. You wanted 10,000, but you are getting 50,000 loss. So there is again a deviation of 60,000 rupees. But this is an undesired deviation. This is a undesired deviation. That is what risk is. So what is risk? Risk is deviation from expected result, which is undesirable, which is undesirable. This is what risk is. Okay, next point is, what is risk management? We know that in business there is always risk. There is always risk, but you need to manage those risks. You need to manage those risks. For example, let us say that you are hungry and there is nothing at home, so you decide to go to hotel and eat, but it is a rainy season. It is a rainy season, so you know that if you go out from your home until the time you reach the hotel, it may rain. So rain is the risk. Rain is the risk, because if you get rain, you will get fever, cold, and this is not the right time to get all this fever and cold. So does it mean that you are going to sit at home only and not eat anything? So you need to manage your risk. You need to manage your risk. Maybe you will say, I'll not go out, I'll order from Zomato. That is management of risk. Or I will go out but wearing a raincoat or with an umbrella. That is also a risk management. Or you may say, let me go out, let me get drenched in the rain, let me come back, let me catch fever, let me eat Dolo or paracetamol, and I'll be all right. That is also risk management. But you need to manage your risk. Okay, so what are the different strategies that you can adopt? So we are going to discuss 1, 2, 3, 4, 5 strategies what we can adopt to manage the risk. Okay, now let's take one very classic example to understand this. This is again the same example what we take in the class. Say this is you. Okay, this is you, and no, it's not you. Let's say it's your friend. Okay, somebody called as Mr. A. Okay, this is Mr. A. And Mr. A has to go to his friend's house for the New Year party. So this is the house where the New Year party is happening. So what the friend has told to Mr. A is, you are coming to New Year party and that day we are going to drink alcohol. We are going to drink whiskey. So Mr. A has no problem in drinking whiskey. Mr. A has no problem in drinking whiskey, but he is worried that after getting drunk, how will he come back home? How will he come back home? So what is the risk? Risk is going there is not a problem. Coming back is the risk, because he'll be drunk. Now, how can he plan his life? How can he plan his New Year party? First one is accept the risk. What is accept the risk? Accept the risk is understanding that yes, while coming back, I may fall down. I may fall down. By falling down, I may break my bones, or there might be wound or something. So I know, I am aware, and I accept the risk, and I'm okay with it. Like, what will happen to max? 1 month bed rest, I'm okay with it. What matters to me most is my New Year party. So that is called as accepting the risk. Being consciously aware that there is risk, and also knowing that it is going to cause damage, but still I am accepting that risk. That is one risk management strategy. Second one is terminating the risk or eliminating the risk. So what Mr. A may say is, I will go to my friend's house for birthday party, but I will not come back. I will go along with my bed, pillow, bed sheet, everything. I'll go and sleep there. Next day morning, I'll come back. This is called as eliminating the risk. So you are having a strategy to avoid the risk. Okay. Next strategy is transfer the risk. What is this transfer the risk? See, I know that while coming back, I may fall down. After falling down, my bike may get damaged. I may get damaged. So what I can do? I will say, I will take some big insurance. So the insurance company will pay for me. So even if I break my bones, I don't have to spend any money to the hospital, because insurance company is going to spend money for me. So this is called as transferring the risk. So sometimes in business, you cannot avoid the risk. And risk is too big to even accept. So what are you going to do? You are going to transfer the risk. So if you are going to take example of football players, the biggest asset for a football player is his legs. If you're talking about Messi, or if you're talking about Ronaldo, so if something happens to their leg, they are not football players anymore. Okay. So if without their legs, they cannot play football, they cannot earn their revenue. So what are they going to do? Can they accept the risk? What will happen if I break my leg? No. They cannot even eliminate the risk by not playing the game. So what are they going to do? They are going to take huge crores of rupees of insurance on their legs. This is called as transferring the risk. Fourth one is treating the risk or mitigating the risk. Mitigating the risk means you're not even accepting it, not even completely eliminating it, but you're mitigating it. For example, while coming back, you're wearing helmet, you're wearing pillow to both your hand, legs, body, everything, then you're coming back. So even if you fall down, there will be little damage to you. So that is called as mitigating the risk, reducing the risk, not completely accepting it, not completely denying it. Okay. Next one is turn back. Turn back means ignoring the risk. Even if there is risk, you are like, that risk is way too small, let me not think about it. Okay, that is called as turn back, that is ignoring the risk. So these are the different risk management strategies. So we come to the end of question number 18. Okay, next let us go and see question number 17. What are the components of ERM? What are the components of ERM? Now again, this is one of the questions where student gets confused. Let's discuss this question. And in this material, while I was going through this material, there are 2 points which are missing. There are 2 points which are missing. We'll not even talk about that as well. Now, first let us understand what is the full form of ERM. Can somebody tell me what is the full form of ERM? Full form. Tell me the full form. I'll explain what it is. Okay. The full form of ERM is Enterprise Risk Management. The full form of ERM is Enterprise Risk Management. Good. Vamsi has given the answer. So Arun has given the answer. Good. So now ERM basically means enterprise is managing the risk. Okay, enterprise is managing the risk. In the previous example, when we talk about risk management strategies, we were just talking about as an individual, how can he safeguard himself, different strategies. But now we are talking about an entire company, a huge company, how they manage their risk. So we are going to talk about components. We are going to talk about components of ERM. Components means parts. So entire thing put together, we call it as ERM. But that entire thing, you can divide it into 8 pieces. You can divide it into 8 pieces. And all 8 pieces put together, you call it as ERM. First, let us understand. What do you even mean by ERM by taking one example. Okay. The example goes this way. Okay. So here, let us say 2 doctors came together. 2 doctors came together. And they decided to open one super specialty hospital. Okay. Which hospital? Super specialty hospital they wanted to open. Now even they opened this hospital. Now they are from science background, they are from medical background. So the hospital started and they realized that hospital is always filled with patients, but still the revenue is dropping every month. So collection is dropping every month. Okay, so it should not happen that way, because if patients are always in the hospital, the revenue of the hospital also should be higher. So the hospital was losing revenue. So they were worried. So what did they do? They called one consultant. They called a consultant and they asked him, look, we have a hospital which has enough number of patients, but still the revenue is falling. Can you help us find out? Can you help us find out why we are losing revenue and what we can do to avoid it. So what is the risk here? Risk is hospital though being full, there is not enough money coming in. Okay, so now they're hiring a consultant, and that consultant now will look at the entire hospital and he will tell what is the reason the revenue is dropping and what are the things that they can do. Okay, so now first thing what he is going to do is he's going to understand these people's mentality. These people mentality in the sense, what is what is the philosophy of the hospital, what is the vision of the hospital, what is the mission of the hospital. For example, these two doctors could have started hospital for two different reasons. One reason could be either to serve the public, to serve the public. It's like more of a charity work. Okay. Second reason could be to earn profit, because we know that with hospital you can earn huge amount of profit. So there could be two different philosophies. One is for the benefit of the people, another could be for the benefit of doctors. So consultant will first understand what is the philosophy of these doctors. Doctors in the sense the executive management, senior management. Are they honest? Is there integrity in the hospital? Do they take system very seriously? So the first step is consultant has to understand internal environment. So when I talk about internal environment, I'm talking about at the senior level of the management, how they treat risk, how they treat this risk, how serious are they? Okay, so that is the first step. Next step is, okay, next step is, one second. Internal environment. Next is objective setting. Now, objective should be set before management can identify events potentially affecting their achievements. Now, what is objective setting? For example, the consultant has understood what is the philosophy, what is the mission statement, what is the vision of the hospital, and he understood that these doctors are not here to serve the public, but to increase their profit. Profit maximization is their goal. So second step is you need to set control objectives. So what is the control objective? That is increasing the profit, increasing the revenue collection. That is the second step. Okay. Third step. Let us see the third step. What is the third step? Here they say event identification. Now, what is event identification? Let me give an example. Same hospital, the consultant will go and he will say why, though beds are full, the money is not coming. So he understood that patients are coming, and it's a super specialty hospital, so only critical cases come. So there is always 50-50% possibility of patient surviving the operation or patient not surviving the operation. So let us say patient does not survive the operation, then what happens? The family members will not pay the hospital fees. They will say anyways patient is dead, so we are not going to pay any fees to you. Okay, so the consultant will identify the event which is leading to the revenue leakage. So he says, okay, so as it is 50-50, so 50% of the customers, 50% of the patients or patient families do not pay the fees. Okay, so next step is, what should be the next step? Here they told, the fourth step is going to be risk assessment. Now, what is the risk assessment? First one is you have identified the event. What is the event? Event is you are admitting the patients without collecting the full fees. You are doing the operation without collecting the full fees. This is the event identification. Next step is risk assessment. Risk assessment means what will happen if you perform the operation without collecting the full fees. That is, if patient survives, money will come. If patient does not survive, money will not come. So this is also very important. You assess the risk and you say there is always 50-50% possibility. Okay, next, after you assess the risk, what is that you are going to do? That is risk response. Now, what is the risk response that they're going to devise? They're going to say, okay, henceforth, 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 we are not going to admit any patient unless they pay the full fees. So the consultant will prepare the policies about admission, how the admission has to take place. Next step is control activities. Control activities, that is, they are going to tell to all the doctors, all the attendants, all the people sitting at reception counter, saying that unless the fees is completely paid, we are not taking the patient. Okay, so what is the difference between risk response and control activities? In risk response, you just write it down. In control activities, you actually implement those controls. You actually implement those controls. The controls could be, we studied in third chapter, it could be preventive control, detective control, corrective control. In this situation, it is going to be preventive control. That is, you are going to prevent the patient from entering the hospital unless they pay the fees. Now, next step is, so here the question ends here. That is control activities. Actually, the next step is information and communication. That is, see, this policy has been defined and it is communicated to the doctors. It is communicated to the staffs. Now, staff sometimes may say, we can do this, but we cannot do it in all the cases. What happens if the patient comes and the check? Should we take them? All those things. So there has to be a mechanism in which the communication should flow from employees to the management and the management to the employees. And next is you need to constantly monitor whatever the control activities that you have put in place, that is not taking any patients unless they pay the fees. So this is once you do it, you need to constantly monitor. That is, after you put this policy, whether your revenue has gone up. If it has not gone up, then again, why it has not gone up. So these are the 8 components of enterprise risk management. Now again, a quick revision of these 8 points. That is, how an organization manages its risk, ERM. Okay, that is components of ERM. First step is consultant has to understand the senior management's mentality, philosophy. Then next is control objective. That is, why is he called there? He is called there to increase the revenue of the organization. So he has to understand the control objective. Next one is event identification. He will understand why the money is coming, why the revenue is leaking. Fourth one is risk assessment. Okay, so here third step is event identifying. So he is saying that the patients are admitted without collecting the fees. Fourth is, because of this event, what is the risk? That is, if patient dies, no money. Step number 5, risk response. Is going to write it down. What are the things that we can do? Step number 6, actually implementing the preventive control in place. Next, after implementing, it has to be communicated to the doctors. It has to be communicated to the staff, and they also should communicate back to the management, saying that whether it is possible or not possible. Then step number 8, you constantly monitor it. You constantly monitor whether the control, the preventive control, what you put in place, whether it is good, whether it is enough, or some other modification is required. This is the answer. Okay, let me take a question if there is any. So can we watch this video after your list complete? Answer is yes, you can. So question number 18 is done. Now let us go to, sorry, this is question number 17, I believe. Yeah, 17 is also done, 18 is also done. Now let us go to two questions. Answers are both same. What outline the concept of ERM and what are the benefits of ERM? What are the concepts of ERM and what are the benefits of ERM? Now this is the question which I'm going to ask you and you are supposed to answer. Say you are an investment consultant. What is investment consultant? The customers come to you and they will say, I have 10 lakh rupees with me. Tell me, where should I invest? So you have different investment avenues. You can ask them to put money in bank FD. You can ask them to put money in mutual funds. You can ask them to put their money in some stock market, share markets. So let us say an old guy who is, let's say, 170-year-old, he has all his retirement money, that is, his gratuity money with him, and he says, I have 10 lakh rupees with me. I have 10 lakh rupees with me. Tell me where should I invest money? So if you are the investment consultant, tell me what are you going to suggest him? Are you going to ask him to keep money in FD, or are you going to ask him to keep money in stock market? Which is that you are going to suggest him? FD, that is fixed deposit, or stock market? I'm waiting for your answer. Now, the answer should have been the see. This is a problem because I'm taking classes in Zoom and it is sent to YouTube. Then there is a lag of 20-30 seconds. So even if you answer, I won't be able to see immediately. Okay, so Arun has answered. Check if he is willing to take risk. He is 67-year-old. What risk he is going to take? Okay, suddenly one day stock market will fall and this old guy will get heart attack. So what you should suggest as a consultant is first is you understand what is his risk appetite. Appetite is hunger. So how hungry is he for risk? So if he is 25-year-old guy, 20-year-old guy, then the risk appetite is huge. So you can suggest go put all your money in stock market. But if it is an old guy, you are not going to say put all your money in the stock market. You will say keep money in FD. Let there be no surprises to you. Let there be no surprises to you. That is suddenly stock market has crashed and all your money is lost. Okay. So what are the advantages of enterprise risk management? So if we are thinking from that old guy's point of view, so how should he manage his risk? Okay, so he has different avenues: FD, low risk, or stock market, high risk and high return. So the first point they are saying, align risk appetite and strategy. Align risk appetite and strategy. First thing is, what is risk appetite? How hungry I am for risk? Can I take too much of risk at the age of 70? If answer is no, you should suggest him put money in FD. So align in the sense it will match. So what is this? What is the expectation of the old guy? He's like, I want constant return. Okay, so that is the expectation. That is a strategy. Then so your suggestion should be such that the risk appetite and his strategy should be matching with each other. So he wants return, but a low risk return. So with the risk management, you can do this. Next is link growth, risk and return. The same point. You can link growth with the risk and return. Okay. Next point is enhance risk response decisions. Enhance risk response decisions. Now, let me give an example, like real life example, what is happening recently. So the banks have given money to this businessman. Banks have given money to this businessman, and businessman said they will use this money to conduct business. And everything was normal. Suddenly, because of COVID, the entire business has stopped. Entire business has stopped. Now you tell me think from bank's perspective. Now think from bank's perspective. Now they want to recover the money. They want to recover the money at the same time. New applicants are coming. They want, some other businessmen want new loans. So if you actually see in all the banks, they have stopped giving loans. They have stopped giving loans for most type of businesses. So now why are they doing this? Because bank has a risk management department. Bank has a risk management department within the bank. The moment they understood that external situation is not good, they are immediately withholding all the loan files. So enhance risk response decisions. That is, only if you have that department in your bank, you can come up with certain strategies. You can come up with strategies where immediately you will say no fresh loans. Okay, or else what will happen? You will give again loan, and there is a possibility that that business will not survive. Again, the bank will lose money. All these things. Okay. Next, minimize operational surprises and losses. Again, going back to that old man's example. If you're asking him to put money in stock market, suddenly goes down, he will die out of that surprise. It's not a surprise, it is a loss. Okay. So if you're saying put money in FD, then there is no such surprises. identify and manage cross-enterprise risk. Every entity faces a myriad of risk affecting different parts of the enterprise. Management needs to not only manage individual risk but also understand interrelated impacts. So a business may have different departments. A business may have different departments. Now, when a management is managing its risk, it should not just think from one department point of view. It should think from entire company's point of view. I'll not get into detail. It is a lengthy topic to discuss, but let's just brush through it. Provide integrated responses to multiple risks. That is same continuation of the previous point. You just don't look at responding to individual risk. Instead you are going to come up with a strategy to mitigate all the risk affecting all the departments. And next one is seize opportunities. Now this is very interesting point. That is, sometimes bad thing can be converted into a good thing for the organization. Take the example of demonetization. When demonetization happened, suddenly Paytm, till then people were not using Paytm extensively, but suddenly the next day of demonetization, immediately the Paytm started marketing, giving huge publicity of how people can switch to Paytm and then they can simplify their business functions. So if you have a proper risk management team in your organization, you can sometimes seize the opportunities as well. Next one is rationalize capital. Rationalize capital. That is again going from, so you may have, let's say 1 crore rupees this year, and you want to do something with that 1 crore rupees. So if you don't have a proper strategy, you may put entire 1 crore rupees somewhere and you may lose that entire money. So if you have little bit of risk management strategies, then you can, maybe you can create a portfolio, you can invest little money everywhere, then you can do capital rationing, all those things. Just go through this, just brush up this point. Okay. So that is question number 15 and 16. Okay. Now, so we have discussed what are the 3 types of processes, that is operational process, support process and management process. Then we discussed a little bit of what is risk. We discussed what are the different components of ERM, what are the different parts of ERM. Then we discussed what is the benefit of BPA, why should an organization come up with BPA, and what are the different steps of having BPA. Okay, so these are the very important questions from this chapter. Now let us again come back to automation. Let us talk about automation of business processes. Now, when I talk about automation, I am talking about using technology. I'm talking about using technology, using software, using hardware, using data, using network, using people. So nothing but using information system to enhance your business experience. That is what automation of business process is. So now what are we going to talk about? Now, first I want to have a little of general discussion as to how do you use a software. Now let us talk about payroll. Now what is payroll? Payroll means employees join your organization, they work for your organization, and they're entitled for certain benefits. For example, they're entitled for their basic salary, they're entitled for their dearness allowance, they're entitled for their HRA, they're entitled for some PF contribution. So there are so many benefits which organization has to give to employees. Okay, some portion of salary should be directly given to the employees. Some portion of the salary will not immediately be given to the employees. It will be deposited somewhere else. For example, PF. Okay, so PF will not be given every month to the employee. It will be deposited in some other fund altogether. So at the time of retirement, the employee will get all this money. So now all this process of calculating how much is the basic salary, how much is HRA, how much is DA, how much is PF, how much tax has to be deducted, all these things can be done by a human. It is not super complicated operation. It can very much be done by a human. But the question is, your efficiency will be compromised. What is efficiency? Let us say your organization like Infosys or Tata or some Reliance company which has thousands of employees. So if you want to pay salary on 30th of every month, you cannot do manual payroll processing. Why? Because you have one HR or you have two HR, and this one or two HR cannot see the details of all the 1,000 employees at once. They will take 10-15 days time. So salary won't be given on 30th, it will be given on next month 15th. So this is not what organization objective is. That is where we decide let us automate our payroll. So when I talk about automating payroll, so I'll use a software. So now let us get into a technical discussion about how this software will function. So there are three levels. When I talk about a payroll software, there are three levels in that software. One is configuration level. One is master level. One more is transaction level. So one stage is configuration, one stage is master, one stage is transaction. Understand this very clearly so that if you understand of one, rest everything becomes super simple. Let's talk about what is configuration. What is configuration? Configuration means setting up the software. Configuration means setting up the software. So let us say that I am downloading one software. Let us, for example, let us talk about Great HR. Okay, so there is a software called as Great HR, which is a payroll software. So what am I going to do? I am going to open the website of Great HR, and I am going to create one account. I'm going to create an account. What am I going to say to that software? I'm going to create an organization in that software. I'm going to say, look, I am from Infosys. So I'm going to say my company is Infosys. Then the software will ask, what are the different benefits that you give to your employees? So I will say basic pay. There will be, let us say there is 2 tick mark. Yes or no? I'll say yes, I give basic pay to my employees. Then they will say, oh, do you pay DA to your employees? I will say yes, I'll put tick mark here also. Then they will say, do you pay DP, that is dearness pay to the employee? I'll say no, I don't pay. Then they will say, do you pay bonus to your employees? I will say yes, I pay bonus to my employees every month, a portion of the bonus. Then they will say, do you pay HRA? I will say no, I don't pay. I will say I don't pay HRA. So what am I going to do? I am setting up the software for my organization. I cannot use, let us say I am Infosys. I cannot use the same configuration of TCS because they have different policies. Maybe they give HRA. I don't give HRA. So I have to configure the software for my company first. So what is the first step of using a software? That is setting up the software for my entity, my organization. So I have to be extra careful while setting up this, because if I don't give bonus, then I have to put wrong. I'm not giving bonus. I cannot say I'm giving bonus, because software you need to clearly specify. So that is the configuration level. So what is the next level? Next level is master level. So what is this master? So master data is relatively permanent data. For example, let us say I configured the software. According to my organizational policy. The next step is I have to add details of my employees. So what are the details that I can add? I will add, okay, so I'm talking about master file now. Once again. Talk about master data. If I'm going to talk about master data, what are the details I'm going to add? I'm going to say employee ID. So this is going to be one column. Then employee name, another column. Then class of the employee. He may be A category employee, B category employee, C category employee, whatever. That is the class or the category of the employee. Then what are the other details that I can add? Maybe his bank account number, his bank account number, so that at the end of the month salary will be paid to this bank account number. No, so bank account number also I may add. Then I may have address of the employee, or I may have contact details of the employee. So these all details are relatively permanent, not always permanent, relatively permanent. Can an employee change the bank account number? Yes, he may. He may say that, okay, I won't use HDFC anymore, I'll use ICICI Bank. So this can always happen. So I am going to create data of all my employees. So this data is called as master data. This is called as master data. So at master level, what am I going to feed into the software? I am going to talk about details about my employees. Clear with this? Okay. Next step is going to be transaction level. So this is going to be my day-to-day function or monthly function. So at transaction level, what am I going to add? I'm going to say, let us say there are 4 employees in my organization. I'm going to say, okay, how many days he was present in the company? Attendance, it is going to be marked here. Okay, so it may be like 23, 25, 20, 14 days he was there. Next, salary amount based on his day of presence. Let's say every day 1,000 rupees salary, so it is 23,000, 25,000, 20,000 and 14,000. So this is transaction level data. This is transaction. Okay, this is the transaction level. So there are 3 levels in any software. We can say that there is a configuration level, there is a master level, and then there is a transaction level. At all the 3 levels, we actually give data to the system. At configuration level also, I'd say, what are my organizational policies, whether do I pay bonus or not, all these things I set up. Next, at a master level also, I give data to the system, which is relatively permanent in nature. Then what is transaction level? That is monthly, I'm going to enter different figures. Okay. Now, why are we studying this? As a CA student, when you go to audit, and the entity will say, we have automated our business process. So payroll is automated now. Payroll is automated. Now the question is, how are you going to audit? How are you going to audit this? So you can audit at 3 different levels. You can audit at configuration level, you can audit at master level, you can audit at transaction level. How do you audit at configuration level? You ask for the organizational policy. So in the policy you will read, okay, whether bonus is paid or not, whether D is paid or not. Then you look at the software, whether this properly it is entered in the software or not. There is a first level of audit. Second level is you ask the master data. That is, you ask for all the employees, how many employees are there in an organization. Then you see in the payroll whether that many employees are there. Okay. Next, you can audit at the transaction level. You will ask for the attendance data. You will check the attendance data with the system and you see whether proper salary is being dispersed or not. Okay, so you can actually audit at 3 different levels. This is the first thing that you need to understand. If you understand this, half of this chapter becomes easy for you, because this is one function that we are talking about, payroll function or HR function. There are different functions like pay to order to cash, purchase to pay. So these are the different processes. Okay, even these can have different configuration level, master level or transaction level data, and you have to audit each and everything. Now, let us only talk about payroll first. Now, you tell me what are the risk that I may encounter while configuring my data or while configuring my payroll system. One is I may end up entering wrong data. Instead of ticking it right, I may tick it wrong. So that is the biggest risk. So what is the control? Proper care has to be taken. Simple as that. Proper care has to be taken while entering any data into the system. If I'm going to talk about master data, what is the risk? See, I will tell you what is the risk. Now, from a company point, you think there might be different possibilities. One is you have actually 10 employees, but instead of 10 employees, 12 employees data is entered. 12 employees data is entered. That means actually how many employees are there? Only 10 employees. But how many are actually getting the salary? 12 people are getting the salary. That is the risk. Or let us say there are 10 employees, but only 7 employees data is entered. That means 3 employees are not getting the 3 employees are not getting the salary at all. So all these are risks. So what is the control? Control is when you enter, it has to be very you need to carefully enter. When you change, you need to carefully change. When you delete, you need to carefully delete. That is, earlier days there were 10 employees, you fired 1 employee. So how many employees should get salary? Now only 9 people should get salaries. But if you don't update the software will not understand whether there is 9 employees in the organization or not. It will give salary for entire 10 people. Okay. Now there might be another possibility. Now let us say your HR is some fraud. So what he will do, let us say you are the employee. So your employee ID is 1, your employee name, let us say some ABC, your class is your A category employee, your bank account number. So software is automatically going to send the salary. So let us say you gave your bank account number saying that my bank account number is 1, 2, 3, 4, 5, 6. But your HR, what he does, he slowly goes, opens the software and changes this bank account number, and he will put his relative's bank account number saying 4, 5, 6, 7, 8, 9. Now when the salary is processed, who is going to receive the salary? It is his relative who is going to receive the salary. So what is the risk? What is the risk? Risk is unauthorized changes are permitted. So what is the control? Unauthorized changes should not be permitted. Simple. So it is not technical, it is very simple. The only thing is you need to understand what it is. Okay. So that is the thing about 3 different levels. That is at configuration level, at master level, at transaction level. So you need to understand in examination what level they are asking. I see students making mistake without understanding what is the question. So if they ask what is the risk at a master level, what is the risk at a master level, you need to write only what is the risk at master level. If they ask you what is the risk at transaction level, transaction level means the basic level details, day-to-day details. You need to talk about what are the transaction level details. So understand the question, which level they are asking, whether configuration level or master level or transaction level. Okay. So there is one question, that is question number 20. This is the last question I'm going to discuss today, and this is the last question of chapter 1 that we will be discussing, with which we will be covering most of the questions from this chapter, which are very important. And we have also understood how do we learn other questions. That is, if you see, there are 10-15 more questions which only talks about configuration level risk and control, master level risk and control, transaction level risk and control. Take it from me, your study material, if you are directly referring institute study material, okay, if you are not referring to this material, there for each risk they have given 10 risk, 15 risk and all. Don't read all those things. Read just 6 risk, 6 control. For all the level, 6 risk, 6 control, 6 risk, 6 control. And the best part is this 6 risk and 6 controls are repetitive in nature. If you understand of one, it is same for all other processes. Same risk, same control. One risk could be unauthorized. See, wrong data is entered. One risk. Control is wrong data should not be entered. There has to be some preventive control. One more is unauthorized changes are permitted. Control is unauthorized changes should not be permitted. Third risk could be data is not processed. Data is not processed. Control is data should be processed. Okay, so risk is same for all the functions. Just read 666 each. That's it. You are good to go for your examination. Next, let us talk about the last question. Very interesting question, easy question, and this comes for your examination. Important one. What are the types of business risk? Okay, let us talk about different types of business risk. So first one is the strategic risk. Strategic risk. So that is, management decides something which is wrong in nature. Let's take one simple example. Let's take the example of Nokia. Nokia, when I was in my high school, there was no other company compared to Nokia. So Nokia was the brand leader when it comes to mobile phone segment. But when Android came into picture, the Nokia said, we are not going to adopt Nokia. Sorry, we are not going to adopt Android. We are not going to go for touchscreen phones. They were very happy with the type 1s. That is the one decision. That is the one strategic wrong decision that they took, which resulted in entire downfall of the company. So taking the wrong decision is one of the risks. That is strategic risk. Okay. Next one is financial risk. Now, if you're talking about financial risk, it is very simple. So sometimes, even if I take the right decision, my organization may suffer loss because of some financial risk. For example, For example, let us say I export my services. I export my services. Okay. So today I enter into a contract with an American company saying that I will do their accounting, I will do their accounting, I will do their auditing, for which let us say I charge $1,000 as my fees. Now what is $1,000 in Indian rupees? Let us say 1 rupee is 70, sorry, $1 is 75 rupees. How much? $1 is 75 rupees. So how much fees I'm charging? I'm saying $1,000. So I am thinking how much will I get? I'm thinking I'll get 75,000 rupees. Okay. Now after the work is completed, I raise an invoice of $1,000 and send it to him, and he will send me $1,000. But after 1 month, if the exchange rate is just, let's say, 60 rupees, how much will I actually get on conversion of $1,000? I'll just get 60,000 rupees. I thought I will get 75,000 rupees, but I'm just getting 60,000 rupees. So what happened? I'm earning less money because of financial risk. Okay. Next risk is regulatory risk. Regulatory risk. That is, regulatory means government laws. So sometimes government makes, sudden surprise laws. For example, you must be knowing PUBG banned, TikTok banned. So let us say you have a huge company running in India, TikTok, everything is going good. Suddenly the government will come and say tomorrow onwards there is no TikTok. So this is a regulatory risk which a business faces. So there is right strategy, no financial risk, but still there is a risk from government. That is called as regulatory risk. Next is something called as operational risk. Operational risk means in a day-to-day operation, you're facing some trouble from your employees. Okay, let us say you change some policies because of which your employees go on a strike, and they will say we are not going to work at all. So this is called as operational risk. There is, we see on a daily basis all these Ola drivers going for a strike, Zomato riders going for a strike. All these things are called as operational risk. Next one is hazard risk. Okay, so what is this hazard risk? That is the risk which is posed from external sources. For example, environment like tsunami, like flood, famine, all these are hazard risk. So all that you can do is max to max, you can take insurance. Okay, you can take insurance to cut down the risk, but this risk exists and you cannot avoid this risk. Then there is something called as residual risk. Now residual risk means, let us say, let's take one simple example of your examination. So you want to go and appear for your examination and you don't want any surprise questions at all. So you study 100% material. You study from first page to last page. So does it mean that there is no risk of encountering new type of question in the examination? No. Institute can always ask question outside the syllabus. Let us say that institute asks you, right answer for this question, and it comes up 4 marks. Though you have studied the entire material, you don't know the answer because the question came outside the syllabus. That means no matter what you do to control your risk, there can always be that portion, which will still cause some threat to you. That is called as residual risk. Okay, so all that entity can do is accept that residual risk. So if that 4-mark question comes, so all that you have to say is, it's okay, let me attempt out of 96 mark and let me score good in this 96 only. So that is called as residual risk, and you need to accept that residual risk. Okay, so it is 1 o'clock. So we need to wind up the session, but if you have any questions, go ahead and ask now. I'll wait for 1 minute, and if there is no question, we are going to end our session. Okay, so there are no questions. So I'll end the session. If there is some question that you have, then you can come to OneFin application. There in the discussion forum, you can ask your question and there we will answer. Okay. Will this question be sufficient enough? Again, First, cover these questions. If there is time, cover other questions. But I strongly advise cover all the questions which is given in this material. Okay. So there is one question from Vicky, that is whether IT and EIS are same. No, it is not same. It is EIS is evolved form of IT. Okay, it is next level. It is like 2G and 3G. So whether 2G and 3G same? No, both give internet, but 3G is evolved stage of 2G. Okay, so we will end up today's session. Any questions? We'll be waiting in OneFin application. Okay.